Good morning, everybody. Happy Thursday morning. It's April 4th, 2024. So I played that song because maybe if you know your history, 55 years ago today, Martin Luther King was shot down in Memphis. And that a little bit later on in the song, you'll hear U2 references that horrific event happening. So 1969, April 4th, a terrible day in our history. But hopefully we've moved on and learned about it. So time to talk about markets. So first of all, S&P 500, pretty strong day yesterday, off the highs, of course, but this morning starting to bounce right back. And if you were in the chat room yesterday, you saw me talking about some stiff resistance levels, and the S&P 500 at about 5230 to 5232. The S&P futures, ES futures, had some resistance at about the 5282 to 84 area, 5283. And I had mentioned in the room, I said, if we can get above those levels, we're probably going to, this is going to be a good vacuum sweep all the way up through 5,300, maybe a little bit higher than that. So currently right now we're seeing that happen after the early jobless claims that just came out and a couple of other smaller data pieces. We also had Susan Collins from Boston Fed speaking, is speaking right now. Speaking of Fed speakers, let me show you what we have on the docket today and tomorrow. So we have a slew of Fed speakers coming out in the next 2 days. So we got one this morning, 10 a.m., Patrick Harker from Philadelphia, Tom Barkin from Richmond, Austin Goolsbee from Chicago, Loretta Mester from Cleveland, Neil Kashkari from Minnesota, and then a couple other Fed governors, Adriana Kugler, who was actually speaking earlier today as well. And then tomorrow we've got Dallas's Lori Logan, Michelle Bowman, who's a Fed governor, Tom Barkin again, Susan Collins from Boston, Tom Barkin again from Richmond. So 1, 2, 3, 4 tomorrow. 1, 2, 3, 4, 5, 6, 7, 8, 9 more today. That's a lot of Fed speak, right? And especially off of the heels of yesterday's chat with Chair Powell, said that inflation is making progress here. Rate cuts are likely this year. So you couldn't be any more evasive than that in terms of timing, right? And meaning when the Fed says there's going to be rate cuts later on this year, you have to look and say, well, here we are, April 4th. We have until December 31st. When's it going to be? We don't know. So that's what following the data and following the information and following the tea leaves from what the Fed speak is all about. That's why today is so important, listening to Fed officials have to say, and then tomorrow as well too. We won't have another Fed meeting until May. And currently right now, the market is not pricing in a rate cut or a rate hike at all in May. We've had some hot inflation numbers over the past couple of weeks. Certainly CPI number. We'll have a new CPI and PPI number coming out next week for March. And let's see what the estimate is on that. You can see here, according to the Cleveland Fed, they do a nowcasting estimate. They're looking for a 0.34 increase in March, but down 0.29. Now that's month over month, right? And so if you annualize that 3.4, that's annualized at about 4%, and then you analyze the 0.29 for April. Again, this is April. We're just getting started with April, so this number is going to change several times over the next month or so before the release is in May. This comes in at about 3.6%, so from 4 to 3.6%. So that's progress from month over month, but still on I look at a 3-month moving average. On a 3-month moving average, we've just been basically flatlining it here, and you can see that right here, right? See a flat line down over here on a quarterly basis every 3 months. So I don't think that the Fed, with the language that they've been giving us more recently, is inclined to cut rates when things are flatlining. They want to make sure that inflation is trending in the right direction, which is down towards 2%. Now, some of you may have heard Steve Cohen last night or yesterday morning on CNBC talking about how a 2% goal is going to be very, very difficult to achieve. And I agree with that. And I think the Fed, by and large, people on the Fed would agree with that too. But they have to do what they have to do in order to try and push inflation down. So they hit a certain level here, 5.25 to 5.5% of the Fed funds, which seems to have stopped large inflation coming into the economy, coming into the system. We've seen good, strong productivity. We've seen good, strong growth in the economy, not driven by higher prices. So they seem to have hit the right level, and now it's just a matter of when is it time to release some of those rate hikes that came in over the past year and a half. So we've seen gold become very, very strong as of late. Silver has been up as well too. Crude oil, $85, $86 a barrel, West Texas Intermediate. So that these sort of trends are gonna persist, especially with some of the geopolitical issues that we've been facing over the past several months. But in the meantime, let's take a look at some of the market charts that I have over here. So not a lot on the earnings front, so nothing really to take a look at this week. I know ConAgra's this morning, but nothing really until late next week when we have some of the banks going to be coming out on Friday. I think JP Morgan, Bank of America, Citigroup, and Wells Fargo next Friday. The following week, Goldman Sachs, and a few technology names. I think Netflix comes out that following week as well too. So let's take a look at the this is a chart that I put up recently. This is the NASDAQ high-low list, new highs, new lows, and again, this is a chart that we like to look at frequently. But what we notice here is, where are most of the prints? And we've seen it certainly for the past 5 months, 4.5 months, most of the prints have been above zero, right? Which is good. We're going to go back to the middle of November. Most of the prints have been above zero. And you see these big white bars. That's bullish for the markets. But every now and then we get some of these prints below zero, like we had earlier this week and yesterday. They tend to recover. So this is a pattern that I've recognized. I notice as a technician, I'm a pattern follower. I look for patterns to repeat over and over again. And you can see on at least 8, 9 different occasions when we got to that zero level or below, and we popped right back up, right? Popping back up means the market popped back up. So I guess, again, this time I have to be looking for the NASDAQ to start popping up again and starting to print higher numbers here as well too. Now, does it mean that necessarily the NASDAQ is going to push up along with that? No, not necessarily. It could be moving up and then cresting and then just going sideways for a while. So it doesn't necessarily mean it's bullish. It certainly means that we have to pay attention to these patterns when they get established. As far as the S&P 500 is concerned, nothing wrong here, right? We tested the 20-day moving average, nearly tested it on Tuesday, and bounced right off of it, and then had a little positive response yesterday, not closing at the highs of the day, but we are going to be over yesterday's highs at the open, it appears, if this holds for another 45 minutes. Listen, the indicators are still strong. They're bullish. Volume trends are very bullish as well too. The cloud is green, and staying above this 20-day moving average every single time has been the right move. If you bouncing off this 20-day moving average, playing that off of that level, it's been the correct move, certainly since the low that was put in at the later part of October. So some names that I've been watching and following here. Of course, yesterday we had a great day on DELL. DELL had a monster day. It looks like it might be following through today as well. IBM is a name that I have some calls out to May, and this one bouncing off the 50-day moving average on Tuesday, had a higher high, higher low yesterday. This one we're going to keep an eye on here. I think it's going to make a move over 200 very, very soon. So keep an eye on IBM. I see Square got a downgrade this morning. Meta is a name that we bought earlier in the week on Monday. In fact, I will show you what we did on Monday here with Meta. So I tell people what I'm doing in the room, and you can see where is it? Added several Meta calls, April 502 at $10. Let's go, go, go. This was early in the morning on Monday, April 1st, not an April Fool's joke. And this is going to rip higher. So we had some people who got into this trade and held on through that dip like I did on Tuesday, and took out a nice gain on it yesterday. Looks like the stock is going to be about $7 or $8 this morning. So these calls maybe up to about 20 bucks, 20 or so bucks today. So we're gonna lock in some winners on that. So that's the chat room, obviously. And if you're not in the chat room, I think you should be. So that's Meta. I do love this chart of Meta, by the way. And even if it breaks through 515, 516, which is an area that I've been looking at for a breakout. If above there, I think we got to move to about 550 over the next month or so. So keep an eye on Meta. And then let's see, what else do I have on my screen here today? NVIDIA is trying to make a move above 900 here. Amazon, new all-time high, 184. Oh, by the way, if you're dissing Fang, anybody who's dissing Fang, wrong thing to do. Facebook Meta near all-time highs, Amazon all-time highs, Netflix near all-time highs, and Google also Google Alphabet near all-time highs. Just hit all-time highs last week. So nothing wrong with Fang. I mean, if you look at the Mag 7 over here, I guess you could certainly have your complaints about Tesla, which is down close to 30% in 2024. So this is a good market. It's been spreading out the ups and downs in the markets, and we're seeing a lot more breadth here thanks to the Russell 2000, which is actually going to be up this morning. You want to see a broadening out of the rally if it's going to continue. So we'll see if that happens today and tomorrow. Of course, don't forget tomorrow, big jobs report coming out in the morning. We're looking for about 300,000 jobs created on the from March, and you can see that right over here. It says 212. Actually, some of the other estimates I've seen are much higher than that because ADP numbers were real hot yesterday. And let's see what else. I showed you this over here, and I think it's going to be it, everyone. Don't forget today, big webinar today, as we talk about the internals. What are the internals again? I'm going to show it to you. These are what the internals are, right? And I'm going to explain all the boxes, what they mean, and how we use them, how do we utilize them during the trading day to try and determine what markets are going to do and how to proceed as during the trading day with the tick, with the ticks and the accumulation distribution, that sort of thing, and the volt. So it's going to be a good webinar. Look for the invites on social media. If you got an email, you should be able to go to the website as well to sign up for that. It's going to be a lot of people in the webinar, so make sure you get there early. Probably going to be starting the webinar at about 4:40 to 4:45 today. When I get back, I'm going to be out for a little bit, but I'll be back close to 4:30, so we should be starting over there. So get in the room early, okay? Don't miss out on this one. It'll be recorded though, in case you have to leave early. So thanks very much. Thanks very much, everyone, for spending a little bit of time with me this morning. It's time to get rolling. Have a great trading day, and I appreciate all of you spending a little bit of time with me today. And we'll be back on Monday. Oh wait, maybe not. Oh, it's the eclipse on Monday, so I will probably be out on Monday. It's possible I could bring the bites, but I'll be watching the eclipse, not directly, but I'll be there in Buffalo for the eclipse on Monday. Be a really fun event there, and I'll be back on Tuesday, and definitely back home for the daily bites on the 11th. So have a great trading day, everyone. Be careful, keep some puts on, raise some cash, do what you got to do to make it to the next day, to make it to the next week, and so forth. All right. Thanks, everyone. Appreciate all of you being with me today, and have a great trading day. Take care. Bye.